staff report. And also, now that you're part and parcel of the IMF program for 38 months, there are some structural benchmarks that Kenya has to adhere to. There are some indicative targets that Kenya has to adhere to. So ideally, we have to, with every quarterly review, there are some benchmarks that IMF needs to look into whether Kenya adhered to. So there are some of the there are 3 structural benchmarks that were delayed as at the end of May. The first one is the budget estimates. If I take you back, late April, National Treasury tabled its estimates for the next financial year in Parliament. That's just within the constitutional requirement that they had to table the estimates before the end of 30th of April. They did that. But however, these estimates apparently from this staff report, these estimates that were tabled in Parliament did not confine with the objectives of this IMF program. So they came again and as per the report, they tabled another estimates on the 28th of May. That said, I'm having my question marks in the sense that 28th of May, Parliament was in the long recess period. So they just came back on the 8th of June, 2 days before the CS came to table his CS budget highlights. So that's one. And also, even if it was tabled on the 28th of May, I'm struggling to get, because even the highlights by the CS were in conformity with the estimates that were tabled in early April. So I struggled with that structural benchmark. So that's one. The other one that was delayed but still was met was now this issue to do with special audit on the use of COVID funds in the last fiscal year between July 2019 all the way to June 2020. What happened last fiscal year is that there were a number of disbursements from multilateral agencies, at least to tackle COVID-19. But so they necessitated a special audit, at least to ensure that those funds, whether they were utilized properly or they just went into different areas. So that report was published on the 10th of June, way later than the end of May deadline. The one that was delayed that hasn't been met is now the issue to do with Kenya Airways. Kenya Airways is suspended in the Nairobi bus. So right now there's prospects of having an international aviation expert consultant at least to come and restructure Kenya Airways. So that is still open. It hasn't been finalized, but they're still hopeful that they can finalize before the next quarterly review. And then there's an issue about the parastatals or state-owned entities, enterprises, which have been flagged as having the largest fiscal risk. The previous IMF report that was published in April, it had like 9 of them. Kenya Airways, it had KenGen, it had KPLC, it had Kenya Airport Authority, it had Kenya Railways, and 3 other universities. That's UON, University of Nairobi, it had Moi University, and JKUAT. Those were preempted in the first report. So there's an additional 10 parastatals that have been flagged in the latest report, KBC, Kenya Pipeline, Kenya National Hospital. There's also Kenyatta University, among other 5 SOEs that needs to be reviewed so such that going forward, they not be able to pose large fiscal risks, at least during the duration of the IMF program. So that came out in the report. The other issue that came out in that report is the issue to do with the change in the public debt limit from 9 trillion. That is what we have right now. That's the public debt ceiling. And it was a change that was done in October 2019. But then the feeling is that, okay, as at the end of this financial year, we are looking at, which by the way is 3 days, is 2 days away. We're looking at public debt to be at around 7.7 trillion shillings. And then we go to the next financial year, we are adding another 930 billion. So we'll be at 8.6 billion shillings, 8.7 billion shillings as at the end of the next financial year. So it'll just be 300 billion shillings as we start the July 2022 financial year. We'll just be remaining with 300 billion shillings. So the feeling is that we just need to even pivot away from this public debt ceiling to public debt as a percentage of GDP, 55%, and then have some other accountability measures. So that's what has been envisaged as per this IMF staff report. So just a matter of keeping an eye on that. And also this issue to do with credit guarantee scheme. Now that we are also covering the banking sector has 30% of the market cap in the NSE. So this in the current financial year, 3 billion was sort of cordoned off at least to support this credit guarantee scheme, of which from this IMF staff report, we understand that only 176 million has already been disbursed as terms of guarantee. So think of an MSME who goes to a bank, but then the bank is quite ish in terms of extending a loan to the micro, small, and medium enterprise. So this credit guarantee scheme that kicks in. So what we have seen since the rollout of this credit guarantee scheme is only 176 million of loans has been disbursed, which is quite a drop in the ocean, considering that the total bank sector loan stock is closer to 3 trillion. So 176 million vis-a-vis 3 trillion is a drop in the ocean. So it's just a matter of keeping an eye on that, in as much as the monetary policy committee statements has been talking about credit guarantee scheme as one of the things that will see an uptick in private sector credit growth, which was at 6.8% by the latest data as at April. So jury still out. Let me stop there. So moving on to the calendar for this week, we're expecting the June inflation. That's on Wednesday, and then budget-related bills needs to be assented by 30th of June. We have the Appropriations Bill 2021, which ideally ensures that the government will be able to spend out monies from the consolidated fund. It has to be assented into law before 30th of June, such that 1st of July, Thursday, we can now get the expenditure in track. Finance bill also was passed last week. We expect the president also to assent it into law by Wednesday. And then the supplementary appropriations bill. Basically, there was a second supplementary budget for this current financial year, which in effect is reducing total allocation by 8.2 billion. It has to be assented into law by 30th of June, for the simple fact that as we get into the next financial year, it doesn't make sense for the president now to assent a bill that is effectively for this financial year ending on Wednesday, and he sends it on from Thursday onward. So it has to be done by 30th of June. So tomorrow, when Parliament resumes its sittings, one of the things that they will have to execute is now this issue to do with the supplementary appropriation bill number 2. So those are the things that we're keeping an eye on this week, in as far as the legislations to do with the fiscal budget are concerned. So let's get into the fixed income side. Last week we saw a galloping in terms of weekly turnover in the order of 53% to 31.5 billion. Most of the trades that were executed were on the infrastructure bonds, so that's the IFBs and also the short-end papers. So let me just speak about the short-end papers briefly. Let me just go to the next slide and then I'll come back to this slide later. So in regards to the liquidity trends that we saw in the course of last week, the average interbank rate increased by 0.41% as compared to the previous week, to an average of 4.8%. What we call the open market operations, or OMO, we saw the CBK basically staying out from Monday throughout to Thursday, and then it just came in on Friday session, and then it sought to mop up 10 billion in terms of the excess liquidity. So what was accepted was 9 billion at a weighted average rate of 5.14%. So basically, these two liquidity trends that we keep an eye on, that's the average interbank rate and also the open market operations. By and large, we're telling us that there's some tight liquidity or some tightness in liquidity broadly. If I look at the average interbank rate and also the fact that CBK more or less stayed out of intervening in the banking sector, it's only that it just came late in the game on Friday session, but it was just at a smaller quantum, 9 billion. So that is what somehow is playing out in terms of the liquidity trends over the course of last week. And if we go back to the other income asset or security, that's the T-bills, we saw that last week, the bids that were placed was just 25.3 billion. So that was a performance rate or the subscription rate of 105.6%. If we compare the subscriptions that we've seen from May all the way to June, just before this auction, the average performance rate was 147%. So we saw a bit of some nosedive in last week's auction, and primarily stemming from a bit of some liquidity issues or some tightness in liquidity that played out over the course of last week. So that is what was expressed in the T-bills auctions last week. That said, our yields continue declining across the tenors. And if we compare specifically from the month of May, start of May, all the way to last week's auction, on average, you've seen that yields have declined and negative 0.9%. That's through 91-day T-bill, 182-day T-bill, 364-day T-bill. And more so in the 364-day T-bill, it has declined, I think, something over 1%, because at the start of May, we were at 9%. Now it's even come below 8%. So that's quite something that has played out as a function of the excess liquidity that we've seen in the last couple of months. It's only that last week it somehow fizzled out the liquidity. But having said that, I think if we look at the secondary market T-bonds, it's like the activity was boosted by this excess liquidity, or in the back against the backdrop of the issues that were placed in the start of the week. Those two primary issues started trading in Monday's session, so it somehow took the bite of the fixed income activity over the course of last week. So in terms of our calculation for net domestic borrowing, as at the end of last week, which is basically the end of this financial year, domestic borrowing was at 458.5 billion, which is roughly 85% of the overall target for the current financial year. So in parentheses, domestic borrowing is also, if there's a decline in domestic government in government deposits, be it in the CBK or in banks, that is also considered domestic borrowing. But in our calculation for domestic borrowing, we just keep an eye on the T-bills and also the T-bonds. So far, I think we have been able to meet the borrowing quantum more or less for this current financial year. A few things that we need to keep an eye on for the fixed income securities, as I said this week. One is that tax sale that was announced last week. It was a bit of a surprise in the sense that what the CBK has telegraphed and what we've seen even in the market action is that the borrowing has been ahead of the curve as way back as May, whereby we've been seeing these massive rejections of bids in the T-bills section, and that has also led to the decline in the yields. But then again, if we revisit the results for the primary for this month, whereby the bids that came was around 65 billion or something north of that figure. But then what CBK accepted was 19 billion. But in the actual sense, they were just looking at 30 billion. So what ideally would have been the quantum for a tap sale would have been, say, 10 billion or 11 billion. But now CBK went all out with an offer of 50 billion. It was a bit surprising, at least for us or in our assessment of what's happening. But primarily, we think that that was a way for CBK to try and mop up the excess liquidity. But having said that, we still don't have the numbers. The numbers may come out on Thursday. And if you compare to the May tap sale, I think, which was off the shelf in under 2 days, it was announced on a Monday. By Wednesday, the results were out. This is a bit different in terms of this particular tap sale. So anyway, that's playing out. We'll be seeing the results this week, but ideally, if that money is the results is announced by July, 1st of July, ideally we are looking at now the next financial year. We're not even looking at this financial year. So it won't even tip the apple cart in terms of the net domestic borrowing for this financial year, but we're looking at the next financial year. That's just our assessment. Corporate bond segment, we rarely talk about it, but today, I think this week, quite pivotal. Today, the EABL MTN early redemption of that 6 billion kicking in today. The announcement was done late May. Usually there's that regulation that if a corporate bond issuer wants to early retire its bond, it needs to give a notice between of at least 15 days and 30 days. So that was met by EABL. So they want to retire 6 billion with outstanding corporate bond. This particular corporate bond was expected to mature in April next year. So it's just a couple of months away from its full maturity. So yeah, that's something that we'll keep an eye on. But obviously, if I look at the EABL's financials reports as at the end of the last financial year, so that was a financial year ending June 30, 2020. I think it was for December 2020. So that's first half of its current financial year. EABL, its financial year is coming to a close actually this Wednesday, and then the results will be next month on the 30th of July. But that said, I think the latest numbers you saw is that the short-term debt, be it loans, be it corporate bond, that were outstanding was around 36 billion. So if they chop off this 6 billion, so they'll still be having some other loans that are outstanding outside corporate bond. It has a number of loans from some of the tier 1 banks. Anyway, but that said, that's what's playing out today. And of course, Family Bank, it had a successful corporate bond issue. They saw 3 billion with a green shoe of 1 billion. Results were out there. They were able to meet even the targets and then requested even the green shoe option. So green shoe, technical terms, is such that if the subscription is higher than the initial target, they can now be able to tap into that an additional amount, the 1 billion. So start of trading is from this Wednesday, something to keep an eye on, those investors who like corporate bond issues. Week's trade, we are still expressing our conviction in the short end. So we are at a buy, still recommending the buy on the first 5-year paper that was issued in 2019, the liquidity flash in the markets, and then which ideally people, now that they are being crowded out, if I may put that term, from the T-bill space, the next best place for investors who have high liquidity is to look at the short end of the curve. The market is still waiting for an announcement for July's paper. Could be sometime this week or early next week. But looking at even the trends, this liquidity we talked about, we have external inflows that was quite big in this particular month. we had that, what we talked on earlier, the IMF 43 billion that was disbursed last week, though it hasn't hit our accounts yet from the numbers we've seen. We have the Eurobond the previous week, $1 billion. So that's 109 billion shillings coming in. And then we have the World Bank, the 80 billion that came out the previous week. But looking at the reserves, FX reserves in the CBK web bulletin, our assessment is that reserves grew by $640 million. So that in its sense tells us that the World Bank money came in. There are also some external repayments. We have the Eurobonds that were issued in June 2014, which ideally had to be paid over the course of last week. So if you knock it off, it's coming to that $640 million net increase in FX reserves. We still haven't, as per the data, we still haven't received the monies for Eurobond. We are still 3 days to the end of this financial year. The IMF monies obviously hasn't come in, so that's another 44 billion. So as we start the next financial year, we have this excess liquidity. Chances are they'll roll into the next financial year with heavy cash carried forward. So from that perspective, they will not have much pressure in terms of its borrowing domestically. So chances are the government will now issue longer term papers as opposed to short end papers. So that's our view. And based on that, investors who are right now from a demand perspective, they have high liquidity, they might now start looking at shorter term paper. So that's our investment thesis behind this buy for the week. Let me stop there. I think I've spoken too much for one person. So let me stop there and I'll invite my colleagues to walk us through the equities. Melody, over to you, or Wes.
Thank you, and good morning to you. We saw the benchmark indices, the Nairobi All Share Index and the NSE 20 decline a marginal 0.4 and 0.1 week to week, respectively. Turnover surged 42.5% week on week to 3.4 billion. On the gainers, we had Liberty gaining 17.4% in share value in the past week, in part as a result, as a reaction to the proposed acquisition of 49 million ordinary shares by Liberty Holdings, incorporated in South Africa, in the capital of Liberty Kenya Holdings, from Hilton Foundation, Kimberlite Foundation, Vanderbilt University, and another 34 million ordinary shares from Coronation African Frontier and Coronation All African Foundation. Noteworthy is that all this transaction will be private. We also saw Nairobi Business Venture continue to rally, realizing 22.7% gain on the back of investor speculation on the announced business restructure. What we know about this is that the success will result in the change of the company's structure and business operation and will dilute the percentage stake held by Delta, which is the majority shareholder at 84% of the company's stake. The top traded counters were Safaricom, EABL, KCB, Equity, and Bank of Kigali Group. On foreign participation, we saw the foreigners extend their dominance, accounting for 52.2% of the week's turnover. They had an overall net outflow position and exited on Safaricom and EABL, while they accumulated on Equity Group, KCB, and Kenya Re. To you, Melody.
Thank you, Wesley. So looking at the banking sector, we noticed that investors were generally bullish on Equity, KCB, Cooperative, with KCB closing at 43.85, which was close to its 12-month high of 44.25. Equity also rose to 46.6, higher than its 12-month high of 45.65. And lastly, Cooperative closed at 13, close to its 12-month high. So in the news, we saw that NCBA placed Kaluworks Limited under receivership with effect from 27th of May over the non-payment of its 4.3 billion debt. So the bank appointed P. Rao as the receiver manager to either turn around the firm and to protect its assets. We note that also KCB followed the same route when Mumias was unable to pay its over 500 million debt in 2019. So when we looked at the annual report for the banking sector supervision, we noticed that the manufacturing sector has faced headwinds brought about by the pandemic, and it constituted 15.3% of the non-performing loans, up from around 13.9% in 2019. Also, banks indicated in the credit officer report that was released in May that they expect to intensify credit recovery efforts in all economic sectors in this second half of the financial year for banks. So these efforts are aimed at improving generally the overall quality of the asset portfolio, now that especially the loan restructuring window closed on 3rd of June 2021. So the week's trade, we're looking at Kenya Re, which is currently stocked at a deep, currently valued, at a deep discount, and also given its substantial stake, government stake in the company. The financial performance in full year 20 was quite commendable under the pandemic that's going on, when it recorded 34% growth in its net earned premium and growth in asset base of 6%. So we recommend a long-term buy for value investors. Back to you, Churchill.
All right. Thanks, Melody. Thanks, Wesley. So I think that's just marks end of the presentation. But the other thing noteworthy is the Nation Media Group. The share buyback was approved by shareholders during its AGM last week on Friday. So from today or up until 24th of September, or when the 10% share buyback has been achieved by the management, is when now we can is when now the results, or is when now the share buyback program will come to an end. So whichever comes first, either attainment of the 10% that is being targeted by the management to be bought back from the market, or 24th of September. So that's something to keep an eye on. We've seen over in the right after the announcement of this share buyback plan, we saw the rally in NMG shares, but it has somehow steadied or fizzled out. So that's something that investors should keep an eye on. Don't know whether there are any questions on the chat. Okay. There's the issue about the AGM. So there's an AGM for investors who have unit trust, which is running parallel to today. That's the reason that Damaris is not on this call today. It's not that she was in Safari Rally or she's stuck somewhere in Naivasha. No, she's handling that particular event. So I understand that there wasn't an audio. Okay, anyway, that's a comment from one of the members. I don't think we have any questions. So any other thing from my colleagues that we need to keep an eye on? Melody or Wesley, do you have any comments?
Well, there's a comment I would like to make about crown paints. You know, there's this rights issue that was issued, and to many investors, they really don't have more on what happens behind the scene on this crown paints. While some of the drivers to the crown paints are the construction sector growth rate, which will take a little bit of a hit because there's a positive correlation between the real estate growth rate and the net earnings of the group. But on a something more noteworthy is its liquidity. The main issue facing Crown Paint and its subsidiaries has been a cash crunch, and the company has managed this cash crunch over the years in using loans, overdrafts, and commercial paper. And with COVID-19 catalyzing the balance sheet mismatch, the need to settle the previous debts and raise more cash amidst the underperforming markets has driven the rights issue. But one thing that investors are speculating on is the credit rating of the counter, because it has relied on debt financing for a while, and its credit rating, it's almost like a no-brainer that it has gone low, that it has opted out for issuing rights issue. So to many rational investors, they view this right issue as something that is not that effective. And also on a bone to chew with you, sir, there's a value investor who said the beauty of investing in small companies is that you can work with small sums at a good price, as institutional investors don't push price up, and there is a higher chance that something is overlooked. What are your comments on that?
Sorry, you mentioned the value investing.
Yes, there's a value investor who said the beauty of investing in small companies is that you can work with small sums at a good price, as institutional investors don't push prices up, and there's a higher chance that something might be overlooked. What's your take on that?
Well, various nuances to that. It's not automatically that a small cap company has a lower pricing. It's not automatically, there's no direct relation to that. Speaking of, if you look at even our local bourse, is it Kuruitu, one of the companies which is quite elevated, Kuruitu Ventures, 1,500. I don't know whether it's that, or I'm not quite sure, because we don't even look at those small caps as such, but its price is over the cliff. So it might not be necessarily like that. So there are different fundamentals that people need to keep an eye on. So small caps virtue that they are, well, their market capitalization is quite depressed. It's not automatic that their pricing will be smaller than that. So if I got your question correctly, so it's just look at it in the context, but ideally the fundamentals of the company, the industry they are playing in, or other things that are outside, or with what will justify its value component, or how to look at it from that value perspective. Yeah, anyway, that's just my overall perspectives. In addition to what you commented about Crown Paints, is last week or the previous week you saw that there are two investors, large investors, who are willing to take up the rights issue that people will not exercise. So in our view, we're saying that the rights issue will be successful. So for an investor who might be holding on to Crown Paints post this rights issue, you'll be diluted by the virtue that now we have other people who now take up the pick up the whole or take up the mantle of those shareholders who have not exercised their rights. So by and large, it's we're just waiting for the numbers. Should be, I think, late this month or early next month, which is sometime this week, to get a handle as to how successful the rights issue is. But already what has been communicated is that there are these investors who will come in and pick up the mantle from shareholders who will not have exercised their issue. So anyway, that's just our comments to that. There's a question about NMG in regards to the buyback from MC. Let me just answer it live. So in regards to expectations of the price, before this share buyback the final details was announced, initially it was just like a blanket announcement. That was in late February, that there's this share buyback issue the management is considering, and then it was just put up there like that. But then later last month is when the final details were announced, that the buyback will be executed between 2 shillings and 50 cents, which is the par value of NMG, all the way to 25 shillings, which is the maximum buyback price. So the market obviously reacted positively to that news. Just before that final details was announced, NMG was around 15 shillings to 17 shillings thereabout. It went up all the way to 22 shillings in a week. Then it more or less stayed at 23 shillings levels up until the AGM that was held in last week. So what the operation or the operate, I'm trying to find a Latin word, so let me just leave it aside. The model that the buyback will be executed is open market, whereby NMG the management will just act like any shareholder coming in with their bidding levels, depending on the prices that are existing and buying it from the market. So that is what will play out. If they are sellers, well and good. But if they manage to buy, to get hold of 20 million shares between now and in between now and 24th of September, they have finished the share buyback price. If they don't, they'll just give the results of the share buyback and communicate how successful they were or not. So that is the 24th of September is like their timeline that they want to execute this share buyback program. So the pricing will be, of course, the signal that was sent to the market with the management buyback is that the management is confident in the market. So that's what led to the initial rally. But now in terms of looking at the fundamentals, the business, we can say that it's trying to pick up with this digital strategy. There's an uptick in subscribers, be it the eNation.Africa. So at least they are trying to adopt to the current digital strategy that has disrupted that industry. So that's what fundamentally will drive the business going forward. But as it is right now, within this share buyback program, is just speculative trading. Beyond that. There's a question from MSMC. Also, some small comments on the effect of equity decision to increase the shareholder decision to 12.5%. What effect will this have on share price? Any effect or again long-term accumulation? So, Melody, over to you. Equity had its AGM last week. Your comments around the question by MC.
Hi, so for that one, I don't think it should have any effect on the stock per se. Basically, when you're looking at the share, we're looking at the fundamentals like the acquisition of the bank in Congo, and basically just looking at its digitization strategy as well. So for long term, I'd say it's a good pick, but the issue of increasing their shareholders, I don't think it will have any effect. Anything you can add on that, Chacha?
You've put it correctly, so that's okay. Thanks, Melody. The other question is on lots of questions around NMG about the AGM. So we'll share the link. I think my colleagues will share the link reshare the link to the AGM unit trust and also the USSD code. So there's a question on by Justin. For long-term investors looking at dividends, what are the top 3 equities you can recommend? What entry point price we can watch for in the next 2 or 3 months? So in terms of this question, we have our income portfolio, whereby we are looking at those counters on a trailing basis, which have a dividend yield at least 6%. By trailing basis, we mean on their last financials, 12 months, whether they announced a dividend, and then comparing that dividend per share as a percentage of the price, the prevailing market price. So if the dividend yield, which is now the dividend per share as a percentage of the market price, is above 6%, that is our threshold for the counters that we're looking at. So ideally, in our income portfolio, we had names such as KCB, we had ABSA, we had COP, I think was also there in that portfolio, and within the banking sector. And then we had also other names outside from different sectors. It's just that those names escape me. I don't know whether the West can assist me on that. So from the banking side, those are the three names that we're keeping an eye on in terms of their dividend announcements. For ABSA, obviously this year, the full year 20, they did not release a dividend yield. So that is still, we're still monitoring it. It's still under review, but we'll give some insights with our upcoming banking sector announcements. So threshold is just those counters that consistently give dividend yields above, which their dividend yields are above 6%, and those three names in the banking sector stick out. Okay, so I guess that's the end of it, but I think let me, for the benefit of those people who might want to join the chat, or might want to join the unit trust AGM, let me just reshare this link. So there's two options. You can join with the USSD code, and then it will give you some instructions, *483*560#, and then there's a web link. So let me just give a couple of seconds for people who might want to join this AGM to get the details, and then they can jump off. There have been no other questions. We can just say thanks for joining us today, and have a great investment week. Bye-bye.